Good afternoon, and happy to have both of you here. So what we will be talking about is related more to communication, to positioning, to marketing, because as we know, active funds sell themselves, particularly if they have a performance or if they have a marquee fund manager's name associated with the product. However, passive funds are in a sense commodities. Okay. So my first question to you is passive, and I'll start with Niranjan. Is passive a difficult product to sell because there is no exciting story? कभी ड्रामेटिक नहीं होता. अभी ये फंड हाउसेस होते हैं, हमारा 20 साल का ट्रैक रिकॉर्ड देखिए, 100 rupees has become 10,000 rupees and so on. And so that's very, interesting, exciting to sell. How do you sell passive fund?
Thanks, Prem, for having me, and thanks everyone for joining in. See, I think so. In mutual fund, every category has been tough to sell. 10 years back, if you had asked me whether balanced advantage fund is easy to sell, the answer was no. Maybe 6-7 years back, before gold rallied, whether gold ETFs were easy to sell, the answer was no. It takes time, and wearing my marketing hat, if I were to say, any product has to build itself as a brand, and that gets built over a period of time with experiences that investors have. So we talked about BAF, we talked about multi-asset, gold ETF. It is all the experience that all these investors have had.
Okay.
Passives, a lot of investors, at least maybe 50-60% of investors have come in last 3-4 years.
Yes.
I think so over the next couple of years, once they experience themselves what passive brings to their table, what it adds to their portfolio, it will become easier to sell. Also, the other thing is, if I ask you a question, whether Maruti is easy to sell or Mercedes-Benz is easy to sell, there's no right answer. If you sell a Mercedes to a Maruti consumer, it'll be hard to sell, and the other way around. So I think so, rather than selling, allocating right, and Vishal and other panelists spoke about it, what is the need? If you're matching the need with the right product, any product today is easy to sell. But of course, as I mentioned, the experience into passives over the next couple of years will definitely make it a pull product than a push today.
So passives का time आएगा.
Absolutely.
Okay, great.
कुछ तो already आ गया है.
Hardaman, how do we accelerate the process? ये अपना आज discussion है.
Yeah, thanks, Prem. So I think, there are two parts to your question. One is whether there is a story and whether passive funds are selling, right? So I'll answer the first part first, which is story. Now, I will not agree that passive does not have a story. Now, for example, last year, we had, commodities that were selling.
Yes.
And there were a lot of stories around gold and silver that were floating around.
Correct.
And most of it was facts. So not called stories, but all of these are facts. And the panel previous to it also spoke about it, that a lot of inflows came into commodities. A year before that, it was a factor-based investing or smart betas. That attracted a story.
Yeah.
Right? So there is a story in passive, and it depends on, the market situation what story will evolve.
Okay.
That is one.
Okay.
Now, coming to the sales part, now, if you bifurcate, and since there are a lot of, MFDs in this room, I would just like to put in some numbers in perspective. So if you look at last year, that's financial year 25, the total AUM of MFDs in passive was about 44,000 crores. Now, as of March 26, this AUM has jumped to almost 70,000 crores.
Okay.
So which is a jump of almost 61%.
Okay.
You come to NDs, the jump is even better.
Okay.
From a 10,000 crores of starting base in March 25, at March 26, it closed at almost 18,000 crores.
Okay.
So the partners, the question is whether they are selling, passives or not, the answer is yes, they are selling. And more partners are now joining this wave, which I call as passive, which has come in. So there is a story, and the sell also is happening.
Okay.
So I think it is, to answer your question, the acceleration has already happened.
Okay.
And it is just a matter of time before it becomes a bigger wave.
Okay. Hardaman, I know you're responsible for the business of developing passives for Mirae. obviously you will be looking to this audience to sell your products. What is it that you find? Is there a pushback from distributors कि passives में पैसा नहीं है तो हम passives नहीं करेंगे?
See, for that, I think what is important is to understand, where all of this has evolved. Now, the entire distribution ecosystem that evolved in an era when passive did not used to exist.
Okay.
It has evolved in an active environment, always.
Okay.
So, to imagine that MFDs will stop selling active and start selling only passives, that is a little far-fetched ask, and this will never happen. This also should not happen because, we always believe that there should be a rich blend of both active and passive in an investor's portfolio. But, it is definitely, compared to active, it would be a difficult sell. Obviously, because of the economical reasons, right?
Because of the
economical reasons, right? The kind of, the kind of payouts that happen on the active side are not, we can never be matched with the kind of payouts that happen on the passive side. But having said this, I think what also plays an important part here is that in active, as what you rightly alluded to in the beginning of this session, is that there is always, something to talk about in active, saying that you have a star fund manager, or you have a multi-bagger, or you have a story to sell.
Yeah.
All of this then becomes a very, in that sense, handy tools for partners to start selling active funds. But having said this, as I, gave you the numbers, there's been an adoption of passives within the MFD community, and this numbers will continue to grow. These numbers will continue to flourish with time, and more we will see more and more, MFDs adapting and adopting the passive funds going in future.
Okay. Now, Niranjan, a lot of distributors here think they're adding value to their clients by identifying the right fund for them. Okay. And when I say fund, I mean it as individual product. This product is likely to perform well. They say their rationale of existence as being able to identify products which are going to generate alpha. Again, if we take out that rationale, a lot of people feel, then what am I doing in this business? If a passive fund hai, usme main kya karunga? What value do I add? So, as a marketer, your challenge is to overcome the emotional attachment that they have to what they think is their core contribution to their clients. How do you overcome that? वो तो बोलता है भाई मैं अच्छे फंड्स आइडेंटिफाई करता हूँ, that's my rationale. अब आपने ये rationally हटा दिया तो what do I do?
Great question. 2 points here. See, I saw a slide on social media where you showed the number of index funds and ETFs that we have. Yeah. I think so. And the earlier panel also we discussed the complexity within passives also will increase.
Yeah.
And the need of advisors and distributors and guidance will be immensely important, especially in a country where, today investor doesn't understand what is passive, what is active. He only understands there is a mutual fund. I need to buy a large part of it. Okay. Of course, some portion of individual investors do understand. So, they definitely have a very, very important role to play within passives as well. And today passives is not only beta exposure, you have smart beta exposure, you have hybrid, you have debt passives. Creating a portfolio using active and passive is not easy. I would say creating a portfolio of only active probably is easy. But if you want to mix passive, you need to mix passive which complements other active strategies that you have in your portfolio. The risk return payoff should be on a rising side. That is actually a very, very important job.
That's the value add.
Absolutely, that's the value add.
So instead of just focusing on a very narrow value add of being able to identify outperformers, you should focus on creating a portfolio which is a good blend and hence is able to reward your investors by giving higher returns at lower risk somewhere.
Absolutely. So I'll just give you some numbers, within active funds, why we say selection is important, because if you see a flexi cap, the best performing and the worst performing over the 10 years, the difference would be around 6 to 7%. And that's the alpha, that's the differentiator that, you can create. Within passives also, if you compare a mid-cap 150 index fund versus a mid-cap momentum index fund, the difference is basically 7 to 8% over 10 years. Absolutely. So if you would have taken that call that I'll give a mix of maybe a momentum and an active mutual fund on the mid-cap space, the total payoff would have been very different.
Okay.
So, gone are the days where we had only one or two index fund. It's a whole lot of options out there. So selection is extremely important.
Okay. Hardaman, एक important question. Do investors buy passive funds or does the distributor buy them for investors? कहाँ से आता है? What is the trigger? Some of them we know come through platforms, self-directed investors. We know a lot of them come through. But in most cases, is it the investor who's asking first or is it the distributor talking about passive funds first? What do you think goes on?
I think, it is a mix of both. Again, if you bifurcate the total passive AUM, I'm talking about FOF and index funds here.
Yeah.
So out of about 3.25 lakh crores of passive AUM that you have currently, about 58% of that AUM rests with MFDs, banks and NDs.
Oh, great.
And about 42% is direct or digital.
Okay.
Obviously, we would presume that digital is now, or DIY as we call it, is now making a dent there. But if you compare the last year numbers, though the numbers have grown, right? The digital last year was about 12,000 crores AUM, which is now 26,000 crores. But the overall share of direct and digital has stayed at 42% itself. So that share has not gone up.
Okay.
So I would tend to believe that MFDs are pushing passive funds, but at the same time, there are investors, their respective investors are also asking about passive funds. So there could be a category where, partners are being forced to sell because investors are asking. But I think the other way around is more appropriate, where it is from, it is happening from the partners end themselves, and they are advising their investors to start looking at passive, surely because of the kind of variety they offer, the kind of choice it offers, and the kind of importance in the portfolio that passive funds now ask for.
Okay. Now, Niranjan, as far as passive funds go, there are lots of arguments for them. So there could be low cost, simplicity, long-term consistency, or you get market participation. Which message or what combination of messages works best for passive funds?
So if we talk about the mass level, I think so one messaging, and we've tested it across marketing campaigns that we do, whether digital or offline. I think so simplifying investors' investing journey is one of the important journey, because see what value add, of course, there are a lot of technicalities. It gives you beta exposure, low cost, low tracking error and all is there. But ultimately, what's the human value it's been created? The value that a passive fund creates is reducing the emotional burden of fund selection within the active space. So if you create a portfolio of say 6 funds and you have 4 probably active funds and 2 passive funds, the amount of effort that you will have to put on those 4 funds on reviewing them, what the fund manager is doing, whether they are beating benchmark, is a lot more than the other 2 funds within your basket, which are passive. Passive funds you don't monitor, right? Because they are giving you market exposure. So that value that has been created, that emotional burden reduction that is happening, which is simplicity, adding simplicity to your portfolio.
Okay.
I think so that messaging probably will reach more masses today. And of course, then there are nuances. A set of investors may want to know beyond that. But if you want to penetrate within the masses, simplicity that it brings to your portfolio, the effort reduction that happens is very, very important to, as a message, I would.
Okay. It's the same question to you, Hardaman. There are different messaging which is possible: low cost, consistency, benchmark participation, and simplicity. Niranjan is of the opinion that simplicity is perhaps the most powerful single message to give out. What is, in your opinion, when you're communicating with your investors, whether through literature, selling points, or one-on-one talks with them, what do you normally emphasize?
So I think typically what is happening in the industry, and we have also seen it, in terms of various campaigns that have been run by various AMCs at different points in time, is that they have all used combination of all these factors and, highlighted on a few independently. For example, somebody could stress more on cost or TER. Somebody could, talk about the funds being managed by an index or the underlying index. Somebody, might harp more upon the simplicity of investing.
Okay.
Whether it is index funds or ETFs, etc. So I think what works is, and, from our side, what, communication goes out also is a blend of all of this. And obviously, one of the most important things I think that works for passives, for partners and, the investors alike, is the simplicity. And it takes away, that stress of being that thought that whether you are with the right fund manager or are you with the right fund house, etc. So all that anxiety that a partner or in turn investor might have before selection, with an index fund, I think that goes out of the
That anxiety.
Yes, that anxiety is no longer there. So then you can have a very, very peaceful life.
Oh.
I would quote, what very famous, economist, Nobel Prize winner, Mr. Paul Samuelson. He was, in fact, one of the only economists in US who got the Nobel Award for Economics. He said a very good thing about passives. He said that, investing should be something like watching a plant grow or a paint dry. If you want excitement, take $1,000 and go to Las Vegas. Go to Las Vegas.
Yeah. Okay.
So I think that is how, passive funds should be perceived.
Okay.
Fill it, shut it, and forget it, as the ad campaign went, back.
You don't.
Right? So invest and just let the index do the wonders.
Okay. Hardaman, you used a couple of things, TER, asset allocation, also you used. Do you think customers, the end consumer, I'm not talking about the distributor here, relates to things like this? समझ में आती है उसको TER, asset allocation?
Unfortunately, no. So let's talk about asset allocation first. So it does exist on a paper, for sure. Investors will know that don't put all your eggs in one basket, right? So they would know. But would they follow it? I am not too sure. You look at signs of when the markets are not performing, SIPs start getting stopped. People start behaving very myopic. They start comparing returns for last 6 months or last 1 year and start investing. So last year, I'm sure many of the partners sitting here would have got calls from their investors saying, boss, now since gold and silver are performing, why don't you shift our entire portfolio into gold and silver from equity? Because equity has not been performing for the last 2 years. So that is the kind of behavior. And where does, asset allocation fit in all this? If you're allocating, you're following the asset allocation model, you would not even ask for it, right? Similarly, TER. TER, I think, is even a lesser known concept, even lesser known than this asset allocation. And people would still give more value if they hear a fund manager saying that a fund manager will navigate the volatility. Instead, if we say that an index fund will be able to manage the TER or manage the tracking error and do a portfolio allocation in the index, that will not be well understood, but people will understand that, a fund manager will ride volatility. So I think TER as a concept and asset allocation as concepts, though we would like them, to be adopted in principle, in letter and spirit, but I think there's still a long way to go.
Okay. So how do you position passives without reducing the conversation to costs? Because if that becomes the main rationale, is that a good thing or a bad thing?
No, it's a good thing. As I initially mentioned, it is all about the experiences that we are creating for the investors. I remember, last week I was talking to one of my friends in the society, and he came to me and said, Niranjan, अरे यार मेरा ये इंडेक्स फंड है, मतलब इंडेक्स फंड नहीं बोला, उसने नाम ले लिया वो फंड का, और दूसरा द अदर वन वाज एक्टिव फंड, ये अच्छा कर रहा है, ये खराब कर रहा है. So for investor, he doesn't understand what it is. Only a vehicle.
He
It is a
doesn't
fund.
understand labels.
Labels. He just understand कि ये fund अच्छा कर रहा है, ये खराब कर रहा है.
Okay.
I think
Good
so.
performing, bad performing.
Good performing, bad performing, and जहाँ पर performance अच्छा है, he keeps adding money. He is more, he builds that confidence. I think so. Experiences ultimately will decide the course. Even in US, the entire passive thing went off. It's not because of the technicality. If you understand, it is the consumer behavior, because they had all the funds, active, passives, and then they saw the passives are probably doing better than active. The entire money started going to passive. So it is all experience. It is built to experience, nothing else. So while in India also we are seeing portfolios are being built using passive and active, ultimately the experiences will decide.
Okay. I want to ask a question, which is, passive funds, you said, were meant to simplify life. With the kind of funds, number of funds that we launch, with the underlying plethora of indices, are we making life simpler or are we making life complicated? पहले एक टाइम था good old Nifty में invest करो, Sensex में invest करो. Today, you have so many factors. You have so many different indices. We've diced and sliced the market into all possible permutations and combinations. Anirudh, who is the CEO of NSE, he was telling me that they have 425 indices, out of which 200 of them have one or more products launched against them. तो ये तो लाइफ कॉम्प्लिकेटेड कर रहे हैं ना हम लोग, डिस्ट्रीब्यूटर्स के लिए भी और इन्वेस्टर्स के लिए भी.
See, I believe, and this is always a debate. We keep having same debate even on the active side, anywhere. And I personally believe that ultimately it is the demand and supply forces that will, correct each other. 2 years, 3 years back, we used to see a lot of target maturity funds on the debt side. We started with Bharat Bond, and a lot of them, every 2 months, you will see couple of AMCs coming up with. Today, there's nothing. So there's no demand. Even in passives, most of these indices did exist maybe 4-5 years back as well. 5 years back, I remember there were probably 130, 140 indices already, but we never had so many funds. So it is ultimately the demand and supply forces which will, decide the course. On complexity, yes, in financial markets, complexity will always be there, and that is the reason why the role of advisors, the role of mutual fund distributors will keep on rising in terms of importance. As we discuss, complexity will be there. In fact, I would argue that 200 is too less for a country with 130 crore people and with just less penetration. In US market, there are 4,000 plus passive funds.
Okay.
So
different categories.
within category, probably, but definitely the number goes in thousands. So I think so. We are way, there is a way ahead where complexity will increase, and I think so. Thankfully, we have a able force of mutual fund distributors and advisors doing their job.
Okay, great. Hardaman, does the explosion in the number of indices and sectors and themes, does it excite you or does it make your job more challenging?
No, certainly it is very exciting, but I still feel that, compared to the developed economies, like for example, United States, we have not even started. We're talking about, indices here. Of course, there are a lot of indices. So we have, today 700 funds in passive alone, out of which 124 are smart betas.
Smart beta.
Smart beta. So it will add to confusion, no doubt. But if you look at Western markets, for example, US has 4,300 funds on the passive side, 4,300. If you compare the market sizes today, all our passive market put together in India is $160 billion. US is $13.6 trillion. So, I mean, and the kind of funds you have in US, and the kind of variety you have. And a lot of this, is being asked in India. I'll give you an example. Last year when commodity was performing so well, there were a lot of queries that came to us asking that why are you not launching a copper ETF or a platinum ETF?
Okay.
Right? Those are the ETFs that are available in US very freely.
Okay.
the kind of indices you have in US, for example, a crypto index or a Bitcoin index or a leverage index, all of these indices are active ETFs, for example. All of these are currently not allowed in India itself. Today, I'm sure if given a choice, most of us would want to, invest in a crude ETF. But sadly, that is not allowed.
Yeah.
So I think today, let's assume ourselves to be, a marketplace, like a mall, where, investor comes for shopping. He would want to see everything. Then it is up to him or, partner to decide for the client what he wants to take eventually. But it is our responsibility to offer everything to the investor, whatever he is looking at. So that is what I look at. So it is the explosion of indices, as we call it. I think we're just starting off. We are nowhere there. I think as and when SEBI allows it, there'll be more and more new offerings that will come up, and that will really grow this market.
Okay. Now, Hardaman, another question to you, which is very specific to Mirae. Mirae has had a phenomenal track record in active for a very, very long time. And then you started launching the ETFs. Okay. Now, does that diminish the attractiveness of your core brand values, or does it enhance it? अभी आप क्या बोलते हो? आप डर गए हो इसीलिए ETF launch कर रहे हो कि ये performance नहीं चलेगी? How does that work?
No, I think we have always maintained the fact, and I think it is true for everyone, is that active and passive will always coexist. For us, actually, our very good track record in active actually is helping us selling the passive also.
How's that happening?
So we are known as a fund house which has delivered returns on the active side. And on the passive side, we are known as a fund house which is innovating. So as I said, if we are a supermarket, we are supposed to offer everything to the investor. So we are launching new ideas on the passive side. In fact, today as we speak, on the passive side, we have almost 65 funds on the passive side, more than what we have in active. So on active, where we are harping on our performance on the fund manager skill. On the passive, we are innovating. We are offering new products for investors to come in and explore different parts of the market. So whether it is commodity or smart beta or thematic, sectoral, all of those.
Okay. Niranjan, how does that work in your case? Does the passive category cannibalize the active business? Because I think in your case, a large proportion of your assets, AUM, is in passives. No.
Active.
Okay. Which would be your largest fund in terms of AUM?
Largest is a Edelweiss mid-cap fund on the equity side, which is 16,000.
And on the passive side?
Passive side, if you see on the debt side, it will be Bharat Bond 2030, upwards of 11,000-12,000.
Okay. So it's a fairly large...
yeah, but if you look at the split, it's basically more on active side.
Okay. But how do you manage the two together?
See, I don't think so any category cannibalizes anything, because if you put that argument even on the active side, if we are selling flexi cap, is it cannibalizing multi cap? The answer is no. Is it cannibalizing large cap? No. If we are selling mid cap, is it cannibalizing large and mid cap? Probably not.
Okay.
I think so every product has its own merit, and if you highlight the merit in a right way and match it with the needs of and the objectives of the consumer, it doesn't cannibalize. It doesn't have to cannibalize, because every product has a different role to be played in the portfolio of the client. So active, passive, I think so. We have heard from the passive head that there is case for active plus passive in India, and I think so India is not active or passive. It's been long debated. The data shows it is active plus passive, and it is not about only alpha, as we discussed. It is all about how much complexity you are reducing by having passive, how much consistency you are building in the portfolio. It's all about that. So I don't think so it cannibalizes. It adds more value to the customer, and we just need to keep harping the importance of each and every category that we bring to the table.
Okay. Hardaman, I wanted to play a little bit game with you. Abhi lunch hone wala hai, and one of the people in the audience approaches you कि मैंने आज तक एक्टिव ही देखा है, पैसिव नहीं देखा है, लेकिन मेरे को समझ में नहीं, मेरे को पैसिव बेचने में कोई इंटरेस्ट भी नहीं है और मुझे सेंस भी नहीं लगता. What would you tell that person?
I think clearly I'll tell him that it is a wave that is coming. Either you ride that wave or you get drowned by it. You can't ignore it. It is not a segment which can be ignored now.
Okay.
It is very big. Will continue to grow big. And again going back to the US market, where of course it took 25 years for the AUM to grow where it is currently. But I think we are on that path. We are growing at a very healthy CAGR. And I think the kind of share that passives command over the total mutual fund assets, that, is also growing year on year.
Okay.
So I think this is well, adopted. It is well to be adopted by partners and investors alike, because this is a wave which is going to come, irrespective.
Quickly make out a business case for it कि कैसे पैसे बनाएगा वो.
So देखिए, पैसा आपका इंडेक्स फंड में, FOF में आपका पैसा बनेगा. There are AMCs that are launching multiple index and funds and FOFs, and those are being launched just to take care of this community, so that this also becomes a part of the asset allocation. So I think index funds and FOF make a very, very clear case. In case you have your own broking terminal, then obviously ETFs can also be a part of it.
Okay.
But there clearly is a commercial case for somebody to start looking at. And obviously we are not talking about a 100% allocation. We are talking about a portfolio allocation, which should be about 25 to 30% to begin with on passives, and then it can gradually grow from there.
Yeah. So Niranjan, the same person meets you over lunch now, and what would you tell him about why he should look at passive funds, selling passive funds at all? Yeah.
So I think so, we always think that distributors only look at, brokerage. I don't agree with that, because there are equal number of active funds where the payout is lesser than passive funds in some cases, and they still sell. It is basically the confidence that the distributor builds in, because end of the day, he is selling trust, and the consumer or the investor, trusts the recommendations that he is making. A lot of distributors, has developed their market on this. Second thing is, it is not about margin in any business in India today, be it mutual fund or be it any distribution retail business. It is about scale. And if you want to build scale, active, passive, or whatever, is there in the market, now SIFs and all, distributors have to adapt to that change and have to participate. So it is not about margin, it is about scale. So if you want to build scale, you have to be able to provide as per the need of the investors and the trends that are changing in any market, be it mutual fund business or any business.
Okay. Hardaman, final question to you. What would be the first steps that a distributor should take towards selling passive funds?
I think, most of the MFDs are already selling it, but somebody who has never sold it, I think if you just look at the plethora of options that it opens for you and for your investors, I think then it becomes a very, very clear case of starting those first steps in passive. Most of them took it last year because commodities are only available in passive, so gold and silver. And most of them started allocating in gold and silver last year. So those steps were already taken. But I think if somebody has not even started it, I think commodities or, start with very basics. Nifty 50 index fund could be the first starting point for somebody who has not ventured into this arena earlier. And then, you can build it up from there.
Okay. What would be the first steps that you would recommend a new distributor, new to passives? What should he take?
I think so. Basic market cap index funds exposure, maybe 10 to 20% of exposure, and along with maybe active funds is a good step to start. And then building upon it, adding smart beta funds and all. But I think so distributors should remember that if they don't add passives, there'll be someone else who will add passive to their client's portfolio, or he himself would add passive to his portfolio. So it is better that they take that pie home rather than anyone else.
Yeah, Mango Millionaire kitab likhi aapne with Radhika, right? You. So have you mentioned passive funds there?
Yeah, absolutely. Absolutely. So we have mentioned that if you don't have an advisor by your side, if you don't have a guide or a mutual fund distributor, the first stepping stone is then buying a simple passive fund, and then try to understand, then, try to swing the market and then go to active funds and all. So for a lot of investors, that's the stepping stone.
Okay. One last question to both of you. What will be the size of the passives industry, or what market share will passives account for 5 years from now, 10 years from now? Today, AUM-wise, it is 18%. If you take folio-wise, it is 21%.
So, it's a guess. It's the question is what could be Nifty at 2 years or 3 years down the line, but it probably definitely be higher than what it is today. I don't have a number in mind, but it will be, because active funds are also giving a tough time to passives, but it is all about awareness about passive fund, which is also rising. So definitely, I think so. It would be higher than what we are today.
Okay. What would be your guess? Because your targets will definitely be linked to how your internal view is on the growth of this market.
See, simple. I think if it is growing at a 20% CAGR,
Okay.
obviously it will double in about 5 years.
Okay.
But again, as you said, not hazarding any number here, but I think the percentage share of passives vis-a-vis the total mutual fund assets will continue to grow. Currently, it is 18.5%, but I think, it can easily reach to a number of about 30-35% in the next 5 to 7 years. That's what it's looking like.
Okay, great. So with that, we come to this end of this conversation. What we tried to do in this conversation was to try and give you a sense of the messaging which needs to go on with the end consumer. They have shared their experience in what works, what does not, how you should start. So thank you so much, and I wish you all the best. And it is, like I said, the theme of this conference is passive disruption. Adapt or be left behind. And I'm sure none of you wants to be left behind. Time for lunch now. Chalo.